Let's tell you about how the US markets fared on Tuesday, and they were mostly flat after a volatile session. Weakness in materials as well as energy shares offsetting strength in financials. Now, shares traded higher for much of the session on the back of an unexpectedly strong read on existing home sales, which lifted banks. Facebook shares extended their slide and pressured the tech sector as well. And on closing bell, the Dow Jones and the S&P 500 index ended flat, and the Nasdaq Composite that declined by about 8 points.
So the same old story, Greece and EU, and now markets are worried about Greece's disorderly exit from EU. Comments from former Greek Prime Minister are having impact on all major asset classes. So the dollar index is at a 10-month high. Asian markets, like indicated, on an average, they are down by about 0.5% to 1%. And SGX is indicating that we may see a rub-off red. But the minute you look at our market, very, very non-inspiring. Put up the intraday graph. So what looked like a perfect start for our markets on Tuesday soon turned out to be a nightmare, and the crunching fall in the rupee weighed very heavy on market sentiment. So Indian markets are now suddenly underperforming regional markets. Yesterday, India was the worst performing market in the entire region, and in dollar terms now, India is underperforming most of the other markets, and that to my mind is the biggest concern. So far, the story for Indian markets have been that foreign institutional investors, they pumped in about $8 billion, and even though the local macro and earnings have been just about okay, foreign institutional investors have not thrown in that all. But if you look at the profile of investors who've invested in India, that's largely ETF money, and ETFs, they normally chase, they invest in a country because of, or they chase performance. So if Indian markets, they suddenly start underperforming other major markets, I worry about what will happen to all that ETF money. We have reached to a level of sub 4,900 on the Nifty, and foreign institutional investors have not turned sellers. What if they turn net sellers? I think we'll have to debate that, but to my mind, that is the biggest concern. But let's connect with Doug Roberts, Chief Investment Officer with Channel Research, joins us live from New Jersey. Doug, always a delight to have you back on ET Now. Are you a bit surprised with comments from the former Greek Prime Minister that Greece is preparing and considering a exit from EU, and his comments have come just on the heels of that EU meeting which is due in Brussels later this week?
Well, I think right now what you're starting to see really within Greece is that, you know, the so-called EU is not a country. It's really a collection of countries. It's very different from the United States. Each has their own interest. And right now, what Greece is saying is we're going to do what's best for Greece, not necessarily what's best for the EU, and they're trying to get the best possible arrangement really for Greek citizens. And at this point, as spoken by the voters, austerity is not in their game plan.
Doug, hi, morning. What about the Fitch downgrade of Japan? Is that something that the market was already sort of pricing it, or has it completely taken the market by surprise?
I think it's more a bit of a surprise. It's something that basically people were anticipating, but really, they didn't think it would take this form. As I say, things are changing quite a bit. You're seeing with each of these countries starting to really look more at their national interest, really, than about basically the G8 and groups as a whole. And as a result, they're taking individual actions which are benefiting there, and it's kind of a work in progress. We don't really know how this is going to end.
Doug, for what was called as the listing of the millennium, Facebook, it has failed. It has backfired.
Yeah, I mean, at that point, what we're talking about is, in essence, really with Facebook, is people, I guess people are getting what they're really paying for in this situation, which is, a lot of people went into this deal figuring that they were going to, if you look at the numbers, that it was going to be some type of a quick flip, and it looks like, that's already been priced into the market, and we're now seeing the results of that. I'm actually surprised somewhat that the underwriters would allow something like this to happen. It's a bit surprising, but not unusual. It has happened in the past, but it's something that probably could put a substantial dent in really technology stocks, at least for the near term.
All right, Doug, appreciate your time and thank you for your insights.